Hi, this is P R Sundar. People always ask me, Sir, what is the formula for your success? And I always say, if you want to be successful in stock market, you need to have two things. One is edge, the other one is hedge. First one is edge is EDGE, edge. That means you must have some knowledge, some skill, some edge over other people. And the second one is hedge, HEDGE, hedging your positions. So what happened last Friday, I was very confident that the markets are not going to fall. In fact, on Friday morning market, it was open gap up. But towards the end, it came with a selling pressure. So intraday Nifty has fallen more than 150 points. So I took that opportunity and I sold 9,000 put option and 8,700 put option, and I sold it naked. I did not do any hedging. So sometimes when you know things crystal clear, it is always better to do naked one. And of course, there are negative points also. And today, I booked a profit on those positions. And today, I'm going to take a view. So what is my view for the next 2-3 weeks? Number one, the global cues are very good. In fact, last Friday, Nasdaq turned positive for the year, and we are very far away. Second thing, on Friday, FIIs bought shares worth more than 1,700 crores. And in fact, this was the first significant buy in the last many weeks. So, I'm expecting market to be slightly bullish, but at the same time, I'm not overly bullish. I'm not expecting Nifty to cross 10,000 by the end of this expiry. But at the same time, global cues are good, FIIs are buying, and today, because ICICI Bank results were not good, ICICI Bank has fallen, and because ICICI Bank has fallen, Kotak Bank has also fallen because Kotak Bank is coming out with results on Wednesday. So due to this, the Bank Nifty hugely underperformed. So Nifty was higher, but Bank Nifty was lower. People are talking about economic package, and people are talking about lifting the lockdown, and the railways are starting their services in a small way. But already IRCTC shot up 5% upper luck today. So therefore, going forward for the next few weeks, I'm maintaining a bullish view. I'm expecting market to be higher. So I thought, what strategy I do? So far, I've been giving strategies, only the earning strategies. But remember, always trading in stocks is not good. It carries high risk and high reward. So therefore, today I'm going to give a strategy in Nifty. Meanwhile, in the question answer session on Saturday, somebody asked me, Sir, how can I place two orders together? I said, you check whether you have simultaneous order in your system or basket order. So you can use. So I'll be using the basket order today for you to show. Now, the market is down from the intraday high. And first let me show you, I'm showing only the Nifty position. And yesterday, I sold 9,000 put option and 8,700 put option. Both I booked the profit. Both I booked the profit, and I booked the profit of 36,000 in 9,000 put option and 13,000 profit in 8,700 put option. So I made a profit of total of 49,000. Because I'm taking a bullish view, I'm going to buy 9,400 call option. 9,400 call option you are buying, that costs around 220. But if I buy 9,400 call, if the market continue to fall, I'm going to lose heavily. So therefore, buying is not my cup of tea. I cannot afford to lose 220 rupees. So what I do, This 220 rupees I am planning to collect by selling far out of the money call options, so that I don't pay anything from my pocket, but if the market goes higher, I make some profit. You go to orders and trades, you can see order entry, basket order, simultaneous order. So this is the one I told you, you can use it. But I'm not going to use 2 orders, I'm going to use many orders. So I'm using the basket order. And this is a normal basket. And here what I do, I'm going to buy Nifty 9400 call option. Okay, maybe 4 lots I do, just for showing you. Okay, at what price I want to do? I want to buy at the market price. Whatever is the market price I want to buy. And then here I choose my name and then I click add. So I'm buying 9400 call option, and after that I'm going to sell 9800 call option and double the quantity. So instead of 300 I'm going to sell 600, also the market price, and adding. And then again I'm going to sell 10,000 call option, also 300 quantity, also the market price. So I click add. So I've added 9400 call, 9800 call, 10,000 call. So 3 orders I've placed, and all I have to do, I have to click place. If I click place, it will say, are you sure you want to place the basket order? Yes. And all the orders got executed. Okay, now let us see how the order got executed. So this is P R Sundar. Since I've already made a profit, that one we close it. We look only at the call option. Bought value and sold value, the net value is minus 4,300 rupees. So that means if the market continue to fall and everything will become zero, I will lose about 4,500 rupees. So to collect that 4,500 rupees, what I am going to do, I am going to sell the weekly option. So it is trading around 25 rupees. If I sell 300 quantity at 25 rupees, okay, it is coming down. So I'm changing to 24. Okay, 24 triggered. Now if you see, okay, net value is 2,000 rupees, 2,800. So that means I sold a lot of options, I bought some options, but net figure I collected is about 2,800. So if the market continue to fall, everything will become zero and I still make this 2,800 rupees profit. But if the market goes up, so where is our payoff chart? Okay, and I will show you the payoff chart. Okay, I'm using the options oracle. So 9,400 call option, and then 9,800 call option, and then 10,000 call option. 9,400 call option is a long call, 9,800 is short call. To change this to short call, click once, click twice, click 3 times, change to short call. Same way here, click 1, 2, 3 times, so change to short call. And here quantity is 300, and here quantity is 600, and here quantity is 300. And expiry, click change to 28th May. So we need to enter the prices ourselves. So as far as the prices is concerned, 9,400 call is 219. This is about 80 rupees. This is about 45 rupees. We just put it approximately. So this is 219, and this is 80 rupees, and this is 45 rupees. We just leave the weekly option. 9,600, we sold it for 24 rupees. If you put it into the software, the chart may not show very correctly. So that one is a very small money. We'll just leave it. And I will, next 3 days, I will follow it up with you and I will show you what I do if that goes into trouble. Now, here you can see the maximum profit potential is only when Nifty expires at 9,800 and the total profit will be 1,15,000. Upper break-even is 9,400. It is not considering the weekly option. So if you don't consider the weekly option, so that means we have paid a little bit money. So for that, it is showing the upper break-even. And lower break-even, nothing. Because no matter how much market goes down, this is not going to give you any loss. Okay. Instead of looking at all these things, we look at the graph. So you can see the graph and see if the market goes down, there is nothing to lose. If you touch it here, you can look at the bottom of the screen. you can say minus 4,200 is the maximum loss, but that money we have compensated by weekly options. Then from 9,400 to 9,800, profit keeps going up. Then from there to 10,100 or 10,050, the profit keeps coming down, and your loss will begin only after 10,080. You can see at the bottom of you can see here. So I don't expect market to go above 10,080. So that is the logic here. And if I'm bullish, market goes higher, I will make profit. If the market goes down, I have nothing to lose. And in fact, by doing a small trade on Friday, selling 9,000 put and 8,700 put, I have already made 49,000 rupees profit. That buffer is also there. And anyway, here I have nothing to lose. So this is a one trade I have shown you. And I will follow this trade up to the end of the month, and to show you how I do the adjustments and all those things. But now I would like to show you just one more thing. In my Twitter, on May 4th, I have given a strategy, did a short straddle at 9,500 in June series, collected about 1,000 rupees premium, and also I gave a disclaimer. You can look here, 9,500 call option I sold 10 lots, 9,500 put option sold 10 lots, 550 plus 446, the total 996 rupees. So which I gave in May 4, and today it is just only 6 trading sessions are over. And let us look what happened today. Nifty 9,500 put option June expiry and 9,500 call option June expiry. You can see here, this one trading around 510, this one trading around 330. 510 plus 330 is an 840. We sold it around 1,000 rupees. Now it is around 840. So that means there is a profit of 150 rupees per share. I have done 750 quantity. So this is giving 1,12,500 as the profit. And the total margin money for this was about 13 lakh rupees. And if you see the rate of return, so it is working at a way 8.5% return. So 6 trading session, 8.5% return, and that is the magic of short straddle. So how come we got so much profit? One is my view. As I told you, it is edge and hedge. So edge is my view, and I thought market is not going to move significantly higher or lower from 9,500. And May 4th, we have taken a position. We put 13 lakh rupees. And today, 6 trading session over, and we have got more than 8.5% return, more than 1 lakh rupees profit. So I'm showing you this to show you the power of stock market and the skill you need to have in order to make money. As I showed you these other trades also, I will be following it up. ICICI Bank, I've taken a trade, and I will do the follow-up small video, 1 minute video tomorrow morning. And today position I have taken will also continue to follow up. Whatever position I am showing here, from now onwards, I will do the follow-up video until the positions are closed. Thank you for watching.